So after holding GME for over a week, being long in GME, I somehow managed to bottom tick the damn stock earlier today. To say that I'm disappointed, it's probably an understatement. Alrighty. In all seriousness, yes, I did manage to bottom tick GME after holding it for a little bit over a week now. I'm going to show you guys the trade confirmations right now on screen as I kind of scroll through them. It shows a lot of different transactions, but that's simply because it was getting filled in increments, but it was at the same point. At $22.96, that's where I got out. I mean, if we look at the chart, where does that put us, right? I know it was sometime over here at $29.96. I mean, you know, just before we had this last little dive lower, and then obviously you guys were there, right? It reversed higher, you know. So okay, but in all seriousness, how does this actually make me feel? Do I feel, you know, I feel bad about myself and stuff like that? Truth be said, I mean, first of all, naturally speaking, you know, we're all human. Obviously, I'm going to be a little disappointed, right? It's one of those things where it's like, you know, hand off the keyboard. You know, I would have been up like $5,000 or so, right? Because I was long 2,500 shares. Now I wouldn't have been up $5,000 from my original position because I got in at 24.72, so I would have been, if anything, close to break even. But still, right? That was quite the reversal that we did see throughout the day. I'm just going to bring up right now as I speak to you guys what the P&L in that trade actually looks like. We'll look directly at the trade confirmations here, right? So I ended up, you know, locking in a loss of $4,415 on it, right? So yeah, of course, you know, I'm disappointed about that. But stepping back, in the grand scheme of things, this is how trading works. I know that I'm going to have great exits and entries, and I'm also going to have piss poor entries and exits. And no matter how great I get at this game, I'm never going to be able to change that. I can maybe change that ratio sometimes, but at the end of the day, a lot of stuff is out of our control. Did anybody have any clue that things were going to pump later today? Absolutely not. I mean, why did things pump? Why did they pump all of a sudden? Look at this chart here. I mean, everything looked kind of mundane. Sure, maybe I sold the bottom, but was it really going anywhere? You know? At 233, we had $23.61. Was that really a big price to be at? You know? We were coming back lower again, right? But there, right at 3 p.m. Eastern time, up we go. Okay, there is an explanation for that, which is option flow, as it usually is with GME. As we can tell here, this is from Unusual Whales. This graphic is being shared all over Twitter, so this may not be your first time seeing this. We can see that throughout the majority of the day, there was negative option flow. Not negative option flow, but there was more put premium being purchased on GME up until about 3 p.m. Notice the net call premium absolutely shoot up at this point on, right? And people were showing transactions that someone came in and essentially bought millions of dollars worth of GME calls. And as we've seen with previous pumps, when roaringkitty, Keith Gill, was buying calls, when he was loading up, when he was doing that, we saw the market makers coming in, hedging those right off the bat, and we saw an upward drift. Well, that's exactly what happened here today. We saw this upwards drift in the stock price. I wouldn't be surprised. Other people are seeing this. They're piggybacking on it. They're buying calls themselves. They're buying shares. So you have this little avalanche effect, a snowball effect, right, that starts to occur. That's all it took today. It simply took someone coming in and dropping a couple $1 million on some calls on GME that got the ball started. Now, can I be mad about that? Can I be mad about the fact that I missed out on this pump so far? Maybe it's going to go to $30 or higher. I mean, we'll discuss this a bit further in the video. I cannot be mad at it because there's no way to predict this, obviously speaking, right? When I got into this long position, I had to put a line in the sand. I'm like, you know what? As long as price holds Keith Gill's average on his shares, I'm willing to stay in this trade. The moment we begin to trade under it, the moment we get wishy-washy of that average price of his, that's when I back out of that trade. That's simple as that. I had a thesis. The thesis was not working out. I can't stay in because here's a big issue, especially if you utilize any sort of technical analysis. You could always draw another line, right? You could always say, well, you know, short 23.30, let's say didn't hold, but, you know, 22.50 is right down the block. Like, let's hold just a little bit for that. But then if that one doesn't hold, you're like, well, 21.90. Maybe that's gonna hold just a little bit more. And before you know it, price is at $19 while you originally wanted to get out at 23 something, right? Everybody's been there in the past, right? Well, in the past, if you've learned from your lessons, or you still do that till this day. And as a reminder, I mean, I've made quite a bit of GME videos on this channel, various positions I've taken on, and I've honestly been proud of some of the timings that I have had throughout this process. With today's loss in GME, taking in my realized profits in Gamestop and my unrealized profits in Gamestop, right? This includes the shares and any sort of options that I've traded with it. I'm somewhere around $230,000 in profit on GME. So this is directly from my statements from my brokerage. This only goes up to yesterday's date, by the way. So any trades that were taken today is not going to be reflected here. So I have GME here. I also have GME in the Frankfurt Exchange, right? So you can see what my gains were between here, those two about 190 or so. This will go down because I had to realize, well, actually, as a matter of fact, some of it is actually being reflected here because notice my unrealized gain. I had this negative $2,600 yesterday, and obviously it ballooned to, whatever it was, like 44 something that I had to realize today, right? But you could see, that what my gains were, but altogether when you calculate everything, it's about 230,000, So that was from the shares themselves going long and short. This is how it kind of looks like, I took all the data from my statements. I've shown this before to you guys. I'm just gonna leave this out here, So there was two instances where I've taken a loss, which was right here, a very small little loss. It was like an intraday play, and on this particular trade, right? I exited my longs for that loss, right? Those are the two instances. There are all the trades that I've done in GME I've taken a loss on. So again, yes, today was a bad timing for me for my exit. But now the reason I bring this up is I want to show you an example, right? I have to remind myself, okay, you know what? Today it didn't work out for me. But I reflect back to a trade in specific with GME. I didn't really cover this on this channel, even though I feel like I should, because, it kind of speaks to the emotions of the game. And before I do, briefly, the reason I have the rest of those games in GME, it was from, I have it kind of listed here already. It's from a couple option plays here, right? So a put spread that I wrote, the call spread that I wrote. I closed a put spread that I wrote for essentially break even today, and I currently have a calendar spread that's unrealized. It's the only unrealized position I have on GME. I'll get to that a little bit later in the video because there's some interesting things to talk about that. Now, there is a trade in particular with GameStop, timing-wise, that I was really proud of myself, and I have to remind myself about it, especially on days like today where I definitely mistimed things, And we're gonna be looking right here. So this is the GameStop in Frankfurt. This is June 7, right? This is Eastern time. Actually, I realized something. Let's first go to actual GameStop. Okay, let me just make sure I'll find the right date. So right here. So notice that night, right? So remember this night. This is the night where we are seeing this second massive pump occurring. We see GameStop going over $60 in aftermarket, right? Everybody's hyped up as hell, right? This is right before Ryan Cohen ended up diluting everybody for the second time. I was up all night, by the way, that night, because I had about maybe 3,400 shares on at that point in time. And, so as you could see, at some point at night, I sold 400 shares, right? Just got rid of them, locked in some profit at 62.53, right? 6:09 a.m. I get rid of 1,000 shares. Why do I do that? Because I see GME earnings hit the deck. All of a sudden, out of the blue, we were not expecting earnings until next week, but everybody saw the earnings come out unexpectedly. The moment that happened, the moment something that's unexpected happened, I got rid of 1,000 shares. Okay, that's what I did right away at $52, right? Realizing about $31,000 in gains. These are my gains, by the way. Let's scroll back up. So after that, about 30 minutes later, again, the earnings are still out. I think to myself, I'm like, wait a minute. There's a reason why GameStop might have released their earnings earlier, and that's because they want to dilute today. They want to do another offering today. and they want to get these earnings out because typically speaking, it's not good if a stock pumps like crazy and then a company does an offering. They might have to answer to the SEC in the sense that maybe the company themselves pumped up the stock, got roped in a lot of investors just so they can do an offering. So one way a company reduces their liability here is by being forthcoming with their financials. In this case, GameStop was forthcoming with their financials. They released them early on. They said, here are our earnings. That way they can, if the SEC comes knocking, they can say, well, listen, we're being forthcoming here. We didn't release a press release trying to hype up our stock. Nothing along those lines. Keep this in mind too. The last time they did an offering on the previous pump, they also released preliminary earnings, just a press release, and then they did the offering, right? So we already saw that from them. So the moment I put the two and two together, I saw those earnings being released early. I got rid of 1,400 shares. So I got rid of all my German shares at that point. Notice how early at night, at 3:37 in the morning, I got rid of 600 of them. This is in euros, by the way. So this is not $49, this is 49 euros. I think if you convert that at that point in time, maybe it was like between $52 to $54, just off the top of my head. You can kind of see that how, this is the US dollar P&L, this is the euro P&L, in euro dollars, in euros, I mean. So I end up exiting out. And that was perfect timing because 5 minutes later, 5-10 minutes later, whatever it was, all of a sudden we get the offering news and all of a sudden the stock dumps to low 40s. Dumps to low 40s. And what do I do then? What do I do once it dumps to low 40s? I end up actually, I end up going short. I end up adding to my short. Again, 6 minutes later, keep in mind I didn't add to a losing position. I added at a lower value, so I was adding to a winning position at that point. And then I ended up covering my short position, and I traded a little bit back and forth a couple of times. One of my most biggest gains was being short. Again, I captured $19,000. But I was proud of myself that day because just like many of you guys, I was excited that night. Okay, when I saw GameStop just rocketing up, and let's bring it up on the chart that day, right? Why not bring it up on the chart? When I saw GameStop just flying that night, this was the day, right? I was excited just like you guys. I had 3,400 shares, massive unrealized P&L. I was like, this is it. We might go to 100 to 150, I was long just like you guys. The last thing I wanted to do was have to sell my shares and admit to the fact that this might be it again, But I did do that decision, right? So here's where the earnings came out originally, right? I exited, somewhere around this region here. We had a bit of a recovery. And then somewhere around here, I exited out again, completely out of my longs. And then we had this massive dump, as you could see. It actually dumped as low as $38 right away. I was proud of myself because I was able to overcome the fact that, I was dreaming big, just like you guys. I was like, wow, if we get to $100, I'll have this and that much P&L, But in an instant, out of the blue, all of a sudden I had to change. I had to understand that, wait a minute, the situation is different now, okay? There's different risks involved now. All of a sudden, there's earnings when there shouldn't be earnings, and that might lead to an offering. It's going to suck if I get out and there is no offering, and all of a sudden the markets open up and it just pumps up and roaringkitty has an awesome stream. That would suck, but that's a decision I have to make, and it's a decision that was really well timed, which I'm proud of myself of, right? In general, when you look at the profits that I made, clearly, trading and going short, not just going long, going short, long, and to make 200 grand just from the shares, because the options was mostly like selling, premium. But to make nearly 200 grand of the shares, obviously it requires a lot of proper timing, Does it require luck? Of course it requires luck, So again, when I reflect on that and that performance, I can't be that mad at myself. And I'm also going to say this. Just because I'm out doesn't mean I'm out for good. It doesn't mean I'm not going to buy in at a higher price. That's okay for me to buy in at a higher price because it's a brand new trade. That trade where I had an average of $24.72, it's gone. That's it. That trade is over. I'm not going to be thinking about it anymore. Well, let's rewind that a little bit, right? Technically, in the aftermarket, the price is below that. What I mean by saying that is I sold that at $22.96, right? Obviously, I don't own those shares at that point. That's where I locked in the loss, right? There's no way for me to go back and get those shares at $22.96, right? What I can do is look forward. And we can talk about the game plan moving forward, right? I got no issues getting back into GameStop. Do I have any plans to short it anytime soon? No, I do not. I don't like being short at these levels. There's not enough meat on the bone. Getting long, we can make an argument. Are we getting long tonight? No, probably not. Because let's look at the 15-minute chart. As it stands right now, we're still in no man's land, okay? That's one of the reasons why I got out. There's just no more momentum. I mean, price might stay at $23 in perpetuity, maybe not perpetuity, but for the next 6 months. We have no idea. I didn't want to have money assigned to a position that's so no future for the next 6 months. I had to get out of it. I knew that, hey, listen, things kick up again, I'll get back into it. As it stands right now, we did see a very nice movement from the lows. We're talking about overall a 10% pop. That's respectable. But we're still within all of these other peaks that we saw over the last week or so. Last week in particular, we kind of were holding, this was about roaringkitty's average. We're holding his average pretty well. And then we kind of broke down on Friday. And then we've kind of been peaking near the lows of the prior week. That's when things started to look pretty bearish, right? We're still kind of peaking at those levels, by the way. What I'm looking for, and I've marked this out already, at $26. You get us over $26, we change the landscape. Things look differently, especially one thing that I'm looking at, pay attention to this bottom right section over here. I want to see option volume kick in again. Notice how, right, so we had this massive eruption that occurred at the beginning of May. This is just when we first began, seeing roaringkitty kind of hit the scene, right? We peaked on June 7th in terms of the amount of actual volume, right? Whether it's call volume, I mean, we could kind of just do this. You can see what the call volume looked like, right? But notice something that's occurring here. We've begun to come down on the volume. Without question, option volume is so important for GameStop. Not just buying the shares, but also buying the options, creating that gamma ramp, forcing market makers to have to hedge those positions. That is so important. But it's hard to get steam if we cannot get people to buy options. We've been going down. I mean, look at the drop off. It's still elevated compared to what it was right before the initial pop in May, but it's been dropping off. We can see it actually kicked up just a little bit today. I would say mostly because of the last hour or so when, we had the big eruption that occurred. But this needs to kind of turn up. Once it turns up more so, then we could be more sure that, okay, we might be in the midst of another pump right now. As it stands right now, I mean, as we talk, we're still kind of seeing a little bit of a fade here. If we open up, 5-6% lower, we may not see that excitement, for people to go out there and buy options, right? If people are not going to see this pump hold on, I mean, as I say this, we get a nice little candle here, but there's going to be a lot of whiplash overnight. We get over $25, we get over $26 overnight, that option flow is probably going to be kicking in. We've got to reverse this. We cannot keep going down in volume. So personally speaking, I'm looking at this $26 level. I'm going to be looking at the option volume. We get above this, we see some option volume come in, which I would imagine both should kind of coincide with one another. I'll get back in. I think then we might have some legs to possibly make a run for about $30 or so. I don't think that's so extreme. Can we go higher? I'm not going to stretch it out that much. I still feel like we need some sort of catalyst to get us up there, above $30 or so, which there could be. I mean, we never truly know what's out there. I'll be honest with you guys. I've said this before. I don't really subscribe to all the, T plus your mom or, all those different cycles or FTDs and all the talk about that and the theories and Wu-Tang. I don't believe in any of that. I don't feel it's necessary for me to believe in any of them to make money of GameStop. And you guys clearly have seen that I've made money not having to believe that, right? I can just look at price and option flow and come to a conclusion as to whether or not the stock is going to run. I don't have to mark things on the calendar to do so. And that's what I'm going to be doing. I'll be watching that level. Get over $26, you might expect me to be getting back into the trade. What size? I'm not sure. There's obviously a different risk involved getting in at 26 bucks as opposed to 24 bucks of change. So I do have to consider that into my trade. But if I do, and if I get back into it, I'll let you guys know. Now, before I let you guys know, let's briefly discuss how quickly the market makers managed to pump up the IV in the options. Now, predominantly it's going to be from the demand for the options. But as you might know, I do have a calendar spread on. I'll show the position itself first in my account. Where is it? Gamestop. Okay. Notice I actually lost money on my calendar spreads today. That is because of the increased IV in the short leg, the leg that I sold, which is this one right here. This is the leg that I sold, and it's up 47% on the day actually, this leg, while the other one is down 3%. Just changes in implied volatility. It's probably mispricement also that's occurring in this leg. It actually should not be down, but that's besides the point. What's interesting, I'll show this to you guys, just a little learning tool here. Look at the implied volatility on the July 12s, right? So I sold into this chain, by the way. Notice how the implied volatility for at the money option is 151%. That's what it was at the close today, 151%. If we look at yesterday's data, for the option that is at the money, it's 112%. So all of a sudden, we've gone from 112%, which it was even lower than this throughout the day today, before the final hour. But we've gone from 112% and lower to 151% within 1 hour, just because people started clamoring into positions. What does that really mean for you? Well, it makes it much more difficult for you to profit off the positions, obviously, right? You have to pay more money for it. It's not normal for it to instantly cost you over 40% points more right off the bat. I mean, the move was remarkable, sure. We could mark it out again, right? I think from here really it was, right? Okay, a 6% move, but a 6% move and a 40% point plus increase in IV, that's not normal. But that happens, and it's just one of the ways that the market makers begin to defend themselves against these gamma ramps by making it more expensive for people to buy these options, right? You could afford less of these options because you're paying more for each option. And we've seen the IV kick up already, just right off the bat. And I guarantee you, notice this too, the difference in IV between the puts and the calls, that's because of the demand. Clearly, there's more demand for calls. We can actually see that by looking at the skew. The skew just simply shows us the difference that you pay for calls versus puts for, let's say, equidistant strike prices. We've been skewed towards the call side, since the last week of April. We've been skewed. The zero represents, there's no skew. You pay the same amount for either side. Notice there's times, when we actually end up peaking up closer to it. Last time was April 18. That's essentially no skew. You pay the same price. But anyhow, this change in implied volatility on the short leg, aka the leg that I sold, which is in this chain here, the 22s is what I sold. So the change in this IV was enough to cause that loss for the day, right? Where I'm currently down $3,400, if we just kind of mark out how the trade still looks like, looks like this. Currently within this tent over here, it's this specific position over here, this calendar spread, I intend to hold the position for longer, if it runs up, you could kind of see there's a bit of flattening that's occurring here. And as time passes by, we should be pushing a little higher up. If volatility drops altogether, especially on the long leg, aka the leg that I bought, which is shown right here. It's the one for next year, this call. If the IV drops below 102 for this leg, the tent will also come down because that option is obviously also becomes cheaper. So I get less for it when I sell it. But that's kind of it. That's all I wanted to cover. I have no other GameStop position, right? If we look at my P&Ls here, right? So I showed you this P&L here where I sold it for a loss, my GameStop position. I had puts that I wrote. Originally, I wrote calls and puts. I took profits on the calls that I wrote about a week ago. And the puts that I wrote, I was holding on to them. I got rid of them today as well. They were deep in the money. There's really very little theta to collect from them at that point. So it was strictly a directional play at that point, whether or not I believe GameStop is going to go up or down. I was not interested in making that assessment. So I simply got out of it. there was a little bit of gain apparently on it, $160. If we were to expire completely out of the money, there was a potential to make $9,000 on it, but price would have had to go above $32 and stay there past expiration. So that was looking like a pipe dream at that point in time. But I have nothing else on except for this calendar spread, which is kind of non-directional for the time being. But get us above $26, and I might just be long GameStop again. And that's my video. If you guys have any questions for me, leave them in the comments below, please. Like this video if you found it informative. Dislike this video if you're just sick and tired of me. I would just appreciate any sort of engagement. That would be great. Other than that, good luck out there. See you next time.